Well, welcome to this week's Cattle Call. I'm Susan Littlefield. Another interesting week to the markets. We're going to talk cash cattle, and as Brad says, cash cattle, because we're seeing an influence on those prices. We're also going to look specifically at the spread that's happening between Iowa and Texas. We've seen the corn prices back down a little bit. Good news when we're looking at those feed costs, but we do know that dry weather continues to be a huge concern for our cattle producers out there. And we'll look at the spreads between the choice and the select. And most importantly, it's grilling season. So get them grills dusted off, because Lord knows the wind has put enough dust on them, and start grilling some burgers and steaks. And Brad, let's start out talking about this cash cattle market and what you're seeing for the trade this week.
Well, thank you. Thanks for having me on again. Of course, Susan, there's times when you and I enjoy being on the show because you allow me to let what little bit of hair I have left, leave it down a little bit. There's times when we've talked about the what seems to be a frustration, or to me a misdirection, where our market doesn't seem like it really cares about what the fundamentals are that at least I cut my teeth on. When numbers get tight, or when the weights are bad, or when they're good, or it pretty much seems to be dictated by whatever the latest fund attention is, and whether the funds like your market or they don't. And the cattle seem to have just kind of disappeared off of everyone's radar. And then people are instead, focused on corn, crude oil, all the inflationary stuff here that went on, the stuff that, of course, didn't go on because of the worry about the uncertainty, like the Ukraine deal, the worry about inflation, worry about a recession. Anyway, so long, dumb answer maybe to what I'm getting at here is it feels good to finally have the fundamentals win a round or two here on the cattle. The fundamentals, you and I have talked about it consistently, that the supply of cattle is pulled forward in the north. Now, we didn't have a big supply of cattle coming in April and May, and I feel just a little bit of indication that finally the north, because of tight supply, has drugged the market higher. Finally, cash has. Best way to rally is to have the cash market pull you higher. I know there's people worried about the premium in the back. We can talk about that another time, but there's premium in the back for good reason, because there's less cattle back there. The fact, though, that we finally saw some life in the cash is I think I was happy to see it finally. And your question about the north and the south, thank you for that softball.
You're welcome.
Yeah, you don't suppose that it makes a difference that if you negotiate for your cattle, you maybe get more for them than you turn them in and give them away? Maybe, I don't know. It's quite a concept. It doesn't always. There are others that wouldn't agree, but I mean, to me, it's just obviously we got less cattle, but the whole way of doing business here in the north is to me, that competitive nature is going to lead to better prices coming.
Well, you talk about that spread. I mean, comparing Iowa to Texas, what are you seeing, and is this going to be something that's going to continue coming up?
$6 or $7 over. $6 or $7 over. I mean, I got 146 this week in their fed cattle auction the other day. They had a high of 139.80 or something like that. Some of it's because of grade, quality, but we feed higher quality cattle year round up here. But particularly right now, if you think about it, so we've got $8 corn going in the bunk. They might have $8.75 or $9 corn going in the bunk. I'll believe you me, they're just turning cattle, and they want to stop the feed bill. And so as you got less days on feed, you have less grade. And so, would a long fed steer up here that's going to grade 95% choice compared to something that might be 65 on a good day down there, it's certainly worth more. Now, $6 or $7 is probably quite a little, but I think that's certainly part of it. The packers searching for grade. We've got it more of it up here than they do down there, so that's contributing to it, as well as the tighter supply here than they have in the north.
I'm sorry, I didn't mean to interrupt you. Looking at the way these grain prices are, you can't even look at an alternative feed source at this point, because everything is astronomically high.
You got that right, and everything. I mean, there's round bales of corn stalks here bringing $70. Hay, tight supply, obviously the distiller byproduct, all this stuff. It's going to be interesting to see what we do to try to the function of the market is to go to a price high enough that we either use less of it or produce more of it, right? Well, we can't produce more corn right now, but the only thing we can do then is to use less of it. To me, the grind here on the ethanol, given what that looks like with the setback in the crude oil, that's probably your first stop to watch there. We'll try to feed to less weight. That's our best chance. I'm sure we'll do some substituting with things that we can try, but there's a limitation to do that and still have the kind of quality steer that we want to offer. But to me, the deal today was, we were talking here the other day, looking at the oats market. And I know people don't raise oats, and I know I'm an old timer that oats knows and those dumb little things, like commodity brokers say.
Right.
But May oats is 98 cents off of its high. 98 cents. I wonder what we'd be talking about today if corn was $1 off of its high. I think I caution everyone that people go like, well, this corn, it's never going down. Yeah, right. The market, when you get this high and this overbought and have this kind of run, there's one of the months of the corn that had 23 consecutive up days, December of 23 in a row. That's just not natural. So the correction today on the corn certainly helped our feeder cattle market, and that certainly spilled over in some of the back end of the market. So yeah, there's worth mentioning that correction on the corn. I thought that the feeder cattle reminds me of when they have a flag in a NASCAR race and they're waiting for them to drop the green flag again, right? Mm-hmm. That's how the feeder cattle look. That if the corn would leave them alone, this feeder cattle thing is ready to rock and roll. Up almost $3 today. That was a fun day.
Dry weather concerns. Last week, you and I talked about increased heifer slaughter numbers. Are they still that way this week? Unfortunately.
Yeah. Yes, unfortunately. Now, we're all watching. I'm watching anyway. This weather through the cow-calf region, and I'm sure they'd way rather have 2 inches of rain or 5 inches of rain, but looks like they're going to get another round of snow. And I'm hearing some calf loss issues, but to your point, if we get enough moisture there that they get their ponds full again and get some grass going again, I think this is something that we probably should be talking about weekly. We get ahead another month or two, and it looks like they're off to a start. The first thing you'll see is the cow kill stop. Cows are worth a lot of money. There's some classes of cows this week were up $20, so that should be telling us something, right? The heifer slaughter, I'm afraid, is with us to stay through the summer. Those heifer calves went on feed last fall, and that's why I think August cattle, 141 and a half is a big price for August cattle. It's only been higher than that one time in August, 2014. That if I had a pick a month to give an enema to the market, it would be August cattle. So that's my little hedge tirade. So don't forget this window here when you're expecting to make a seasonal high. We're in that window. We're in that time frame on fat cattle. As we move into May, there will be more calves, but there's also always great demand in May, like you hinted at, with grilling season, Mother's Day, and all the rest.
All right. Well, thanks. Safe trip next week. We'll try to catch up with you next week, and we'll play it by ear. How's that sound?
Sounds good. A week from today, I will be in Washington, D.C., trying to tell the story of the small cattleman. So,
all right. You're not going to want to miss it. We'll get you guys a link if you'd like it. That's this week's Cattle Call. And as always, remind folks, commodity futures and options involve a substantial risk of loss, not suitable to all investors. That's the Cattle Call here on the Rural Radio Network.